Welcome to episode 190 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at an inefficient market move. Inefficient market moves are formed when the price moves really fast. Usually, this is due to a news announcement that came out, some comment that somebody may have made. So once something like this comes out, market will move really fast. However, this is a sentiment-driven move. So a lot of times these moves will get retraced. That's what we are going to look at. So let's take a look at the charts and see what an inefficient market move looks like, how to enter a trade based on this type of a trade setup, and what exactly we're looking for in terms of profit.
Here we are looking at how to trade an inefficient market move. An inefficient move is when price drops suddenly. So this is our inefficient market move here, as well as this one right over here. So an inefficient move is when a price drops suddenly. Usually this is due to some sort of comments that have come out or news or something like that. So essentially we're looking for a quick drop in price, and because this is such a quick drop in price, generally it leaves a vacuum in the market and prices tend to snap back. So it's like an elastic band, it gets stretched and then prices snap back where the move started from, and then it goes to wherever it needs to go. However, this quick drop is then followed by a reversal, which kind of goes back to the starting point of the move here. So this is what we are looking for. This is our inefficient market move, and we are looking for a reversal of that move. So what do we need to look for here? Very important thing to keep in mind in terms of an inefficient market move is that we have to be careful that price does not break down and continue lower, because when price moves here like this, sometimes it can just do this flag formation and then continue lower. So that's something we have to be careful with. So that's why we have to give it some time, and we have to see that the price, how price reacts at the bottom here. So if price does not break the low here, so generally we'll see the inefficient market move is followed by some sort of a pin bar. So in this case, we have rejection here, pin bar, and this is generally what we see. So we just want to make sure that price doesn't break the low here. So if price breaks the low here, then we cannot trade that, because then it ends up being a continuation pattern. So that's something to be careful of. But once we see that the price is holding above our low here and it starts to move back higher. So here we see that price has given us a pin bar. We have another pin and price starts to pull back, and then it just goes sideways for a while. And then as we can see here, price starts to pull back higher. So this is just our Asian session, price is just going sideways, and here price starts to pull back. So this is where we want to take our trade after we see this reversal. So we have a Morningstar pattern here, double bottom, price is starting to move back higher. We have bullish volume coming in. So those are all the different things that make this a high probability trade. So important thing will just be the patience. So once we get this Morningstar formation and we have a double bottom, so we just wait for another candle just to make sure that we are seeing that follow through. So once we get these couple of green candles here, we see green volume, time to enter the trade long here. So we're looking for a move to the upside. Our stop would go below the pin. We want to make sure there is enough room for price to move, just in case it comes and tests the bottom here once again. So that's where our stop would be. We enter the trade long and we stay with the trade till price moves into usually where the price moves start from. So here we also have our R1 pivot point level. So I like to just put it just above, just before price hits that R1 level. We can also put it right at the top here. So we just have to be careful. It's better to just put the exit target before price gets all the way into where the move started from. But in this case, goes all the way even slightly higher and goes into the next support and resistance level. So it's best to exit it right here. From entry to exit, we get 60 pips in our trade. So just to recap here, an inefficient market move is when price moves suddenly. So in this case, prices drop suddenly, and this creates a vacuum. So in this case, price drops suddenly, and then price tends to basically reverse this move and go into the beginning here. So here we see when we see that the price is holding, it has not broken the low. That's our chance to get into this. So price starts to hold above our support and resistance level here. So we enter the trade long, our stop goes below the low here, and we follow or we stay with the trade till price fills this move back up. And in this case, I have put my profit target just before we hit the R1 level here. You could put it all the way into here as well. This is just a little bit safer. So that's our inefficient move from entry to exit here. We get 60 pips in our trade. Another thing to keep in mind here actually is this is an inefficient move as well. So price just went up really, really quickly, and you'll notice that this got filled as well right from where the move started from. This is where price took off, and price came back all the way into this level as well. So this is again a tradable opportunity. So in this case, we see a double top here. We see a bearish engulfing candle close. So this would be a good level to enter the trade. And then we're just taking it to the base of this candle here. So this is another inefficient move that gets filled once again. So this is how we trade an inefficient market move. In this case, our profit is 60 pips or $600 if trading one standard lot.
If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to subscribe and share it with your friends. I'll be back with another great trade setup next time.